David Reilly.
Smith Barney. That's the word.
No, it used to be. It had like 15 names.
Oh, it used to go back. It used to be Solomon Smith Barney. Now it's just Morgan Stanley Smith Barney.
Right, but it used to be Morgan Stanley Dean Witter Smith Barney.
The Dean
correct?
Witter. I forgot
Wasn't
that part.
it?
Yep, it was.
I'm not getting that wrong, am I?
Well, no, it was Morgan Stanley Dean Witter. Smith Barney was somewhere else.
So what's the good word? There's a negotiation. There's an agreement in place. And
Well, it actually there isn't a negotiation. It hasn't started. So keep that in mind. This is sort of like the pre-game positioning. It's not the tailgating party. They've passed by this. But what it is Morgan Stanley owns 51% of Smith Barney. Citi owns 49%. This is a joint venture they went into a couple of years ago. They have an agreement going forward. Morgan Stanley has the right to buy 14% this spring. I think it's 15% in 2013 and then 20% in 2014. Now, one of the questions out there, and there's a lot of rumbling going on, is will they maybe decide, why doesn't Morgan Stanley buy the entire 49% right now?
Why don't they?
Well, it all comes down to price.
It all comes down to price.
It all comes down to, and their valuations are different.
I'm going to step back, and you basically posit in your piece that, look, it depends on what your view is of what's going to happen to the stock market. If there's still a bull stock market a year, 2 years from now, and you're in bullish phase, then maybe Morgan Stanley end up paying more in the future than they could today. I mean, that's right. That's what it comes down.
If you know the brokerage business, I mean, if you've got the economy's going gangbusters a year or two from now, if the stock market's doing really well,
rates are higher.
They're going to be making a lot more money. I mean, their pre-tax margins have been very depressed. You and I have talked about this before.
That's what I want to just touch on. Why does Morgan Stanley want more of this business?
Well, I think this goes to James Gorman, the CEO. He had a view after the crisis that what he wanted was a business that wasn't just dependent on the highly volatile trading business. So he wanted to put another leg under the table. So he wanted a fee-based business, which, I know you're not a big fan of the brokerage side because of the fixed costs.
Yeah, but the retail business is a crummy business.
It's tough, but the one thing it has going for it, and I understand this thing on this, is that it's fee-based, but it's also you're not using a lot of capital for it. It's not capital intensive. So you look at the return on equity for a business like that, it's really high. Now the idea, we don't know yet if it's going to work, is hopefully that can balance out. When you're having a really volatile time in the trading business, you've got this sort of steady state going on. Okay, when times get better, that's maybe a bit boring, but the trading's knocking the lights out.
Okay, we're going to end with a prediction. I need a prediction from you. Will Morgan Stanley end up buying all of Citi's stake in it in the coming months? Yes or no?
I'd say no.